Hi, good afternoon. You're watching Closing Trades on ET now. Well, the markets for now are off the lowest point of the trading session. Nifty is just around the flat line, trying to make up its mind which way it wants to go. It's off the lowest point of the trading session as well. In fact, very close to the highest point. As far as the Sensex is concerned, it is in the green right now, just marginally so. Bank Nifty too is trudging around okay, but there's a very clear divergence as far as the banking space is concerned today. If you look at the private banks and HDFC and Axis and ICICI, they're all in the green, but it is the PSU names which are on the back foot. So whether it's a SBI, whether it's a PNB, whether it's a Bank of Maharashtra, all of those public sector banks are clearly on the back foot. What is also clearly visible is the underperformance of the broader market. So the mid-cap index and small-cap indices will come up for you on the screen. They clearly have been underperforming the frontline index, and that is quite underscored by the kind of advanced decline ratio you have at your hands as well. Globally as well, not major cues coming in. If you look at the European markets right now, pretty sideways at the moment. Asian markets too were a bit in the red. And the US futures for now is suggesting a very, very mild downtick. So not much to really, ride home about. Having said that, some of the energy names are doing okay. So a power grid is something which is doing all right. NTPC is in the green right now. So maybe just some of these select names. But other than that, just lacking the momentum, and maybe call it the Bank Nifty monthly expiry as well. But that move too is visible as far as some of the banking names are concerned.
Oh yeah, absolutely. Talking about what's weighing heavy in the market today, and that's definitely IT. LTIM is quite a drag. You've got Wipro, which is currently down, and same can be said about TCS, Infosys and the likes as well. Having said that, on the flip side, there is support coming in from metals. And again, it's not an across-the-board move like it was the case yesterday. So while you do have Nalco and Tata Steel holding out, a large part of the metal stocks as well are seeing some profit taking. And ICICI Bank, Reliance to some degree, that's flat right now. HDFC Bank marginally higher as we speak. So they are managing to hold on. And it's a bit of a tug of war between the bulls and the bears out there. So Dabur, Oracle Finance, IEX, LIC Housing, these are your big drags also from within the broader end of the market. But Piramal Pharma has been a big winner all through and through. I mean, it gapped up, and from there it's managed to stick on with its gains for the better part. Volumes as well have seen a perk up, a 5% uptick coming into the stock. We will get you a slice of Anisha's interview with Nandini Piramal, wherein she's spoken about as to how the FY30 revenue and margin guidance is conservative. We will play that soundbite, but couple of brokerage notes as well. Antique has talked about their ambitious growth plans. They've talked about how they aim to achieve the $2 billion revenue mark by calendar year 2030. And they actually believe that CDMO is going to be a big catalyst for them for growth going forward. Jefferies has maintained a buy, up the target price now to 260 from the earlier 195. IEX, though, that continues to rumble under pressure. Had it not been for the F&O ban, perhaps you would see steeper cuts. Post the ET Now news break on the power exchange coupling story, you've got IEX, which is languishing another 4.5% in trade today. And Bernstein has maintained their underperform, target price of 130. UBS has downgraded it to a neutral from the earlier buy and slashed the target price as well. Or rather up the target price, even though there is a little bit of a weightage reduction to 700 from the earlier 650 thereabouts. But that said, clearly it's Piramal Pharma all through and through. That's the star performer today in an otherwise quiet market. Let's hear out a slice of Anisha's interaction with the management.
We're focusing on our differentiated offerings, whether it's sterile fill finish, antibody drug conjugates, or high potent APIs. And as well as integrated projects, we're one of the few companies that can offer our customers a blend of both East and West. With that, it doesn't include China. And I think that's a big benefit for us. So currently, focus is on organic growth. We believe that operating leverage by filling our existing sites and maybe doing some brownfield capex will benefit us more. However, we will look for or inorganic acquisitions, but it will depend on cash flows, debt levels, and the opportunities. I think we'll manage capex overall. I think the overall intention is to reduce our debt to EBITDA ratio to 1. So we'll balance it through increasing EBITDA and cash flows. One of the things we've seen a doubling of commercial on patent revenue. and from 9 molecules in, I think, FY17 to about more than, I think, 17 or 18 molecules now. And so that's seen a growth, and that's can be reflected in on-patent growth. We also have a number of molecules which are in phase 3, and over the next 3 to 5 years, about half of them should become commercial.
Okay, so that's about Piramal Pharma holding out in the green. What's in the red, however, is Easy Trip Planners down about 15%. Policy Bazaar for the second straight day is in the red right now. Dabur, of course, the UBS downgrade that we talked about. As well as you do have AstraZeneca, which is giving up gains that we saw yesterday. On the gaining side, Saregama, eClerks, 5-Star, Z Entertainment, as well as Tata Communication. These are some of the high flyers. Well, let's put the spotlight on the markets and try and understand what the mood is. Naresh, let me first come to you. Nifty Bank, it's the, I think it's the monthly expiry today as far as the financials are concerned. Talk to me about what's your view as to what's the way forward for the private banking versus the PSU banks?
So we've had a tight range today, but in terms of comparison, private banks look better. They were underperformed for quite some time. And now we've started seeing relative outperformance. So when we look at a private bank to the PSU bank ratio, that has started turning for the first time after 2021. A lot of names in the private banking side, at least the large ones, have come back to their 52-week highs, very close to making those 52-week highs. So for the short term, it's very clear that private banks could outperform the PSU banks.
Private banks to outperform the PSU banks, but in terms of the other internals of the market, it is some of the select other PSUs which are doing quite well, Kunal. A Power Grid, a NTPC. These are some of the stocks which are in focus. What's the take there? And also let's bring in the other, oil and gas names in ONGC and GAIL. They are trending a bit differently today.
So yeah, I think NTPC is looking very attractive. That's a chart which over the last few days has been showing signs of strength, and looking at the way the stock has given a breakout about the 420 plus mark, looks like that the stock is getting ready for a 450 plus kind of a breakout move over the next couple of days. ONGC, I think that's a chart again which has come back into a retracement mode. I think closer to 300 levels could be a very good entry point. The stock is retraced back towards its 200-day moving average. Power Grid, I think, has been one of the very silent movers and more consistent in terms of price performance. And the stock, even in the last 2-3 weeks, I think has seen consistent upside for itself. So very slow, gradual up moves for these stocks, but then it's building up when you look at this on the longer term play.
Right, okay, that's a couple of the energy names and that's being talked about. Let me welcome on board Chakri Lokpriya as well. Chakri, hi, afternoon. What's the take on the market right now? Tread with a little bit of caution, or would you say, if you had been sitting on cash, right now is, a good time as any to start deploying that?
Good afternoon. Thanks for having me. I think it is a good time to buy. The only thing is, as far as the PSU banks, there are a couple of headwinds. One is, of course, the Bharati Vodafone 100,000, 1 lakh crore worth of loans, they'll have to run to the banks. And usually it's the PSU bank. Second is the mining ban, the mining fine placed by the Supreme Court. So that also could impact the PSU bank. So until there is some amount of clarity, I think these PSU banks will tread water a little bit. On the other hand, companies like HDFC Bank are, in particular, are realizing that they need to bring down their mismatches, which we've been talking about for a long time, mismatch of loan deposit ratios. So if that happens, that is, if they manage to sell maybe, let's say, about 5% of their loan book, then things will start looking up. Now, partly in anticipation of that, these banks can do well. And the third and final point is interest rate cuts by RBI following the US will also act as a catalyst for banks.
So that's a take on banks, but what's the view, Chakri, when it comes to FMCG? UBS today downgraded Dabur, that's down 4-5%. The entire story that we were building about a rural recovery, is it getting undone?
I'd rather buy a media company like PVR, INOX. People go out, watch the movies, try to go and buy a Coldplay ticket. Those are the things which kind of are working, rather than in FMCG where there'll be the seasonal recovery. So we don't see any volume increases coming in the pure FMCG. So I think it's this low ticket, like for example, PVR, INOX. Going to the movies is not a high ticket item. And we're going to the festive season. Those are the companies which will do well.
Argue whether it's a high ticket item or not, because sometimes some of these ticket prices as far as PVR is concerned is as high as 1,000-2,000 bucks for a movie on a weekend. So not really sure, but and especially the ticket prices for the likes of Coldplay, not even getting there. But we'll do one thing, we'll take a short breather on the show. When we come back, we'll discuss how the market setup is looking like and what to buy and sell.
Back with closing trades right here on ET now. Well, the Nifty, of course, is a lot more somber, as is the rest of the globe. Even if you look at the US futures right now, for instance, they're absolutely quiet after hitting a life high, both on the Dow as well as the S&P overnight. Similar is the picture with the European markets as well. In fact, it's a 0.5% cut that you're seeing for the DAX right now. FTSE flat, 0.5% lower for the CAC. FTSE MIB as well, trailing a little bit soft as we speak. And that was exactly how Asia as well panned out. It's pretty mixed across the board with both Japan as well as Australia closing in just mildly soft. Hong Kong and Shanghai, of course, has seen a much bigger move, so to speak. But Kunal, where is it that leadership is going to come in from? And you think in the next lap, if we were to build on to 26K, it'll have to be banks which will do the heavy lifting?
Yeah, I think banks should take a major chunk of that heavy lifting, and within banks also I think it's the private sector banking names which have been doing very well. And it still seems like the steam is not off for many of these names, because when you look at the likes of ICICI Bank, HDFC Bank, and today I think we've seen Axis Bank outperforming or showing signs of strength relatively. I think these three names and add to that Kotak Bank, I think these 3-4 names have shown signs of very strong resilience, at to the point that now in the last 4-5 days, when the banking move start to get a lot more positive or on the upside, you're seeing PSU banking stocks just about getting into a zone. They've underperforming, but they're not going to a major kind of a correction like what we were seeing over the last 2-3 months. So which means that the markets could get back into a tilt where the private sector banks can stand to outperform. That divergence would continue between the private sector and the PSU names, but the outperformance relatively for the banking stocks on the upside of the bank Nifty as an index should continue. And add to the fact that what we are seeing also is emergence of other sectors like the real estate sectors. The Nifty Realty Index has made a very strong comeback. You've seen the metal stocks commodity theme over the last few days. That's also made a very strong trending move. So that indicates that we are getting into that zone where the risk on appetite is coming back. And when that happens, generally these three high beta sectors or rate sensitives, we call them typically banks, real estate as well as metals. I think these stocks they tend to do very well.
Okay, point taken. So private banking names it is. But Chakri, this dip that we are seeing on the likes of East My Trip, Policy Bazaar for the last couple of days, is this a buying opportunity or they are lower for a reason?
I think Make My Trip will stay away from, they want to, I think, get into electric cars or electric buses. It's a difficult thing to do. It's, the stock re-rated a little bit, but then I think it pulled off. So Make My Trip, the margins are not holding up. Valuations are up there. We'll stay away. And Policy Bazaar, I guess, they just don't have the margins there in that business. The whole insurance sector is under problems, and what they pay back to Policy Bazaars is even lower.
Having the right enough of margins as far as PB FinTech is concerned. But Naresh, what's the view coming in on a Z Entertainment, which is suddenly perking up quite nicely, and HEG as well?
So Z over the last many months, every time it has come to that 120, 125 mark, has bounced back to 145, 150. Till the time it doesn't sustain above the 145, 150 mark, it still looks like a downward trend. So would wait out for some more time. HEG on the other hand is shaping up for a longer term breakout eventually if it happens, and we are seeing Graphite India also do well. It has a lot of resistance around the 2600, 2700 mark in that band. So for now, would wait for a dip and then maybe look at it.
Right. Okay. Those are some of the interesting, buzzing stocks that one is seeing currently in trade. Other than that, of course, IEX continues to languish. About a 3.5% dip is what that stock is currently settling in at. There's LIC Housing Finance also lower by about 3%. There's Dabur, like Anisha just flagged off. That, of course, is languishing. It's down about nearly 5% as we speak right now. So these are a bunch of names. There's BEL2. It's going to be trading on the Nifty 50 come September 30. 30th. That's the end of this month, in just a few days from now. And this is going to be the first defense PSU, by the way, to be included in the index. Today, of course, it's languishing about 1.5%. But Chakri, we were just analyzing data, and while most of these, defense PSUs in particular have fallen off from their 52-week highs, they've also risen from the recent lows. About 9 to 10 odd % across the board is the kind of recovery that you've seen. Do you think money would make its way and one would, begin averaging out in some of these beaten down names?
If you look at, in particular, Bharat Electronics, the order flow continues to be strong. One of the things which happen, and its valuations are okay. And now that it's getting into the Nifty, there would be some amount of additional flow. So I think the stock will hold up. But in general, what's happening to defense, we believe, is after the election, there was a lull or whether there would be order flow or not. But recent order wins by various defense companies is giving back the confidence that, yes, order flow will continue. But meanwhile, these stocks are expensive, so I wouldn't really venture into them now.
Kunal, what's your take though? Because you were of the view that one should average in now and start buying this dip, right?
Yeah, I think for BEL, HAL, it's a very good zone where one could look to buy. So, both in terms of price correction, we looked at the last 2-3 years of the data for these stocks, and on an average, these stocks have corrected by 30-35%, 37% to be precise, for these stocks. And I think what we've seen the last 3-4 months is that these stocks have corrected that 30% retracement for themselves. So maybe 4-5% here or there, that could be a trade which these stocks may swing into. But when we look at this as an opportunity and looking at the previous such opportunities where these stocks corrected and completed that mean reversion phase, I think this could be a very good entry point for stocks like BEL, HAL, maybe an averaging zone for someone who's bought at higher levels.
Okay, so that's a take coming in on BEL. But it seems like there's fresh opportunity brewing as far as the real estate sector as well as the power sector is concerned. For real estate, we did speak with Minister Piyush Goyal earlier, and he talked about how there's not only a potential back home, but countries like Australia, etc., real estate players from India can play a large role. And as far as the power sector is concerned, we also have that news coming in that the National Electricity Plan is expected to be implemented over the next 15 days itself. We recently had an initiation note coming in from Motilal Oswal as well. Yesterday, Power Grid was up. Today, it's up, and NTPC too is following suit. Let's do one thing. First up, let's hear out what Minister Piyush Goyal had to say, and then we'll follow it up with what the Power Minister had to tell us.
We had 1,100 real estate developers of repute come down from India for a 3-day conference in Australia. They have been studying Sydney City for new technologies, emerging construction styles. And will you believe it? They are so super excited about the growth opportunity in India. They told me that they expect in the next 30 years to construct twice the number of buildings that India has, all of India has today. So what was constructed in, I don't know, hundreds of years in India until today will be tripled in the next 30 years. Look at the huge opportunity for the entire ecosystem, whether it's steel, cement, furniture, carpets, electricals, electronics, air conditioning. The list just goes on and on.
इस नेशनल इलेक्ट्रिसिटी प्लान को विधिवत आने वाले 15 दिन के अंदर और इसका विधिवत लॉन्च भी करेंगे, इसकी घोषणा भी करेंगे। लेकिन उसके कुछ पहलू इसको मैं जरूर आपके सामने बताना चाहूँगा कि हमारे यहाँ अभी तक जो अनुमान लगाया गया कि हमारी पीक डिमांड ऑफ पावर ये 2030 तक 425 गीगावाट और 2032 तक 458 गीगावाट ये जो है हो जाएगी। तो इसको प्राप्त करने के लिए हमने पूरी अपनी योजना प्लानिंग बना ली है। नई प्लान के अंतर्गत हमने अपने जो ट्रांसमिशन नेटवर्क है इसको भी बढ़ाने की योजना बनाई है, जो 424 में अभी 2024 में यानी इस वर्ष तक 4.85 लाख सर्कल किलोमीटर ये हमारी लाइनें हैं और आने वाले 2032 में इनको बढ़ा करके 6.48 लाख सर्किट किलोमीटर इसको पूरा किया जाएगा।
Right. Okay. That's the take coming in from some of the ministers. In the meantime, just looking at, some of the other buzzers in trade and, sure enough, IT has been a little bit of a languisher today. But let's just take stock of, what a Delta Corp has been up to, because the board has approved the demerger of its hospitality and real estate business. That stock got off to a good start and is holding on to a large part of its gains. About a 4.25% move, continues there. And then KC International, wherein there is a 4,500 crore rupee board approval coming in for its QIP. The approved QIP floor price is at about a 5% discount to its current market price, 1,015 now on KEC International as we speak right now. Chakri, what about the entire capex and infra theme? Much the flavor all through, a large part of last year as well as this year. And then, of course, the flavor turned to defense, EMS, and now, semiconductors, the new energy theme, etc. But where is it that you are largely standing when it comes to the capex theme?
The energy theme, we made money if you bought it last year. We will make money. I think if you buy it this year again, NTPC, Power Grid, if you look at the kind of numbers, India needs to add power equivalent to the entire what EU has over the next few years, 3 or 4, 5 years. To do that, which means all these companies, NTPC, Power Grid, now transmission is going to become a far more complex mechanism because you have power from various sources, hydro, solar, thermal, all kinds of power, which means the grid needs to be smart enough to understand. Power grid is like the one nation, one grid, kind of a big grid. So you'll see phenomenal growth. NTPC, same reason, green energy will double and triple and again double over the next 10 odd years. So the numbers are huge. So even if they fulfill very small portion of it, still there will be very profitable investments.
Right. Okay. Chakri, we'll let you go on that note. Good to have you on the show as always with your thoughts in. Let's take a very quick break on that note. We will, of course, take in the closing trades as well. Before that, Naresh, let's have your ideas.
So that would be a buy on Axis Bank that has shown relative strength today in the banking space. New swing high here, would expect it to continue towards 1300 levels in the near term.
Kunal, what about your closing strategies?
So I'll go with the contraband TCS, the stock which has fallen down, I think 10% approximately in the last 1 week or so. So I think at current levels, expecting the stock to bounce by at least 2 to 3 percentage points from current levels.
Okay, let's take a very quick break. When we come back, the last half an hour of trade this afternoon.
Welcome back. Well, Nifty has moved into the green, even though just mildly so. At least there's some green on the screen. And in the last few minutes, there is a bit of a spike. So maybe we should pull up those heavyweights, the HDFC Reliance of the world, because usually this kind of move is backed by some of those heavyweights as well. Today, Axis Bank is also doing its bit. There is a bit of an up move in the last few minutes on Axis Bank as well. So clearly, it's the private banks. And Power Grid has been doing well. 4% up move as far as Power Grid is concerned. So some of these stocks really pushing the Nifty higher. Anand Tandon also joins us on the show to talk to us about the fundamentals. Anand, before we talk about the secondary market, wanted to talk about the primary market because clearly the action is heating up with large IPOs coming in, Swiggy as well as Hyundai, and it looks like clearly people are not worried, and at least the investment bankers are not worried about liquidity. Have you looked at the DRHP of either of the companies? Would you be a subscriber to either Hyundai or Swiggy?
These are all large companies with large capital raises, but also businesses which are fairly steady. So from that point of view, one doesn't worry too much these days about valuations as the market has shown us. The question really is that the market is pricing IPOs post their listing at way more than what they're coming in at. That doesn't mean that they should actually be doing that or that it is in any way a reflection on them being priced cheaply. But as you mentioned, the very fact that you are having a kind of robust market despite the inflow of new, fresh money-raising IPOs is both good and bad. It shows that we have a very robust sentiment towards the market in the first place. And secondly, it helps to take away some pressure from the secondary market. Put some pressure on the secondary market in terms of having companies having stratospheric valuations. So from both perspectives, it is good for the longer term. In the near term, of course, right now it is a lottery. Anybody who gets the investments is likely to be able to flip it. Longer term, I think it will take a while for the market to figure out where many of these companies should actually list.
Sure. Valuation aside, that only time will tell. But just purely in terms of how the businesses are, the kind of, dominance that they share in each of the verticals that they operate in, how is it that you're building a case right now, Anand, for both Swiggy as well as Hyundai?
Well, the case is being made by the investment bankers. If you take Swiggy, currently, I think we are looking at 4 or 5 players now, all actively expanding their portfolio into across everything. So now there seems to be less of a differentiation between, quick commerce, e-commerce, or even the kind of product range they are looking at. Everybody is now getting into supplying everything from groceries to mobile phones. That's going to be a challenge. Obviously, there is an issue to be thought through about how just having dark stores, etc., will work, or for that matter, how food delivery will also move along with other areas. But for the moment, since the growth is robust and the companies have a fairly large white space, given the number of cities that they can cater to and the number of stores they can put up, the top line growth and the GMV, etc., numbers will be looking quite positive. Over a period of time, you will probably have 1 or 2 players who will sustain, and time will say which of them will continue to do well. Execution is clearly the key. In the case of, you mentioned Swiggy, and which is the other company you were talking about?
Hi.
I'm sorry, I can't hear you.
Hyundai, the other one to get the approval.
Right. Well, that's hardly a new company. That's you are not really. There's not much that one can argue about Hyundai in terms of the product profile. It's already a leading player in the business, and it's therefore only a question of valuation. They have an established base. They've been around for a while. There is no particular reason why you should be having to have any trouble in terms of placing where you should be in that market.
So that one has been a long time player already. You have enough history to really analyze what's happening there. But the other one that we are surprised about, positively, pleasantly surprised, is of course Zerodha, the kind of profit figures it has reported, a whopping 4,700 odd crores. That comes at a top line of just around 10,000 crore rupees. But the negative is that they're talking about perhaps a potential decline in revenue to the tune of 30 to 50% in the coming year, given the kind of curbs that SEBI might put on the derivative side. Let me bring Sharad on board to talk to us about the numbers as well as what their guidance is. Sharad?
Well, as the guidance has come in very cautious for the next year, that is FY25. But just let's look at the FY24 headline numbers also before that. 21% growth in revenue on a year-on-year basis. In PAT also there's a 1,000 crore element of unrealized gains, and that is why you're seeing a 62% jump as compared to last year. Now, if you look at the share of active clients as a percentage of BSE itself, that also has been declining. What an explosion we saw in the month of March 2021, and now that has come down to 16%. But the main thing from the blog post which they have come out with, especially on the FY24 numbers, is they have turned cautious. Now they're expecting almost a 30 to 50% drop in revenue, and this is coming on the back of changes which are expected to happen in the index derivatives, as recently SEBI had floated a consultancy paper also. The future trading is expected to be impacted because of higher STT charges which are applicable from October the 1st, and also they're expecting a 10% revenue dip because of SEBI's True to Label circular, which will go live also on October 1st. Now, the reduction in referrals is also expected to impact growth because of the authorized persons which the SEBI had come out with the circular, and even the annual maintenance charges for smaller accounts, which is less than 10 lakh rupees in the demat account, over there also would be impacting growth. So a lot of cautious commentary coming in for Zerodha, but they have also spoken about the diversifications. Now the diversification expected especially to develop newer products which aren't derivative focused, and also they will be focusing on the loan against securities business and the AMC business, which they have roughly 3,000 crore worth of AUM as well. Now Nitin Kamath, the founder and CEO of Zerodha, he had purposefully stated also that given the significant rise in the markets over the past 4 years, we are prepared for a possibility of a market correction which could lead to a decline in our business as well. So a cautious commentary coming in from the promoters and the company going ahead.
Okay, that's that on Zerodha. But Anand, that's been the interesting case, right? That this buoyancy in the market has also sort of, given a leg up to the market cap of so many market-related entities. We were talking about MCX, BSC, Zerodha, of course, is not listed, but so many of these AMCs, etc., and brokerages, mutual funds, all within the listed space have done very well. Anything in particular that you like?
Looking at a slightly longer term portfolio, the problem with brokerage is that it remains cyclical. Obviously, if you were to just look at the leaders in the space over the last 10 years, you will see that every 3 or 4 years, somebody new emerges because you are able to find technology or pricing or some new idea by which you are able to reduce, to take away market share from existing players. So from that perspective, it is a cyclical business with very little moat in terms of the business itself. Now, that said, it is not as if the existing players are going away anytime soon. They have obviously built fairly large franchises, and most importantly, most of them there are hardly any only brokerages alone left. Right, they have a wide variety of wealth management products. The wealth management product business, especially the mutual fund, etc., is a lot more stable, a lot more steady, and will continue to grow with ups and downs. But because it's a collection business and you get money on the entire AUM, both the distributors as well as the AMCs are probably a lot more stable places to be. Overall, there is one caveat, however, that most of the AMCs are now being priced as if they were private equity funds, not capital market funds. Private equity funds tend to trade at a higher percentage of AUM simply because they have a lock-in on the funds, whereas most mutual funds should not be trading at that kind of AUM. I mean, to give you an example, the largest fund in the world, BlackRock, has an AUM percentage as a market cap to AUM of only about 1.2%, whereas something like HDFC in India trades at 13-14% of the AUM. So therefore, I mean, there is a huge gap between what internationally trade at and in India, but at least that's a business that will continue to grow for the foreseeable future.
Cyclical, but at least in the near term, there is visibility on these select pockets. But Naresh, ring of a fresh record high on the Indian markets. Is it fair to say that 26,000 is the new kind of floor for the Nifty? And what's the next level on the upside? And this clearly is that 3 p.m. move.
So too early to say that it's the base, but yeah, the base is shifting. So earlier it was 25,000, then 25,400, and now we would be looking at, say, 25,500, 600 to be the new base. And we are seeing good participation. We are seeing a lot of moves coming in the later part of the day. Overall, the range has been pretty small. So looks like a slow and steady move. Next bet could be we go closer to 26,200 to 26,400 band.
Kunal, what's your take? This rally is expected to continue into tomorrow because that will be what monthly options expiry for the Nifty also? Or which way do you expect it to go? Because again, since it's 3 p.m. in the last 10-15 minutes, there has been this vertical up move.
Yeah, and I think many of the stocks are contributing over here. So, it's not restricted to just a few large cap names. Bajaj Finance, Finsa, Vadani Ports. I'm looking at the screen and many of the charts have shown signs of recovery, Dr. Reddy, etc. So some of them, of course, do have high weightage. Some of them have average weightage for the, in the benchmark indices. But I also believe that, the markets can, see further leg of up move from current levels also. And yes, we could be looking at a fresh base or a pivot support for the index at 26,000 mark. So, earlier also when we moved around the 25,000 mark, around the 24,000 levels, those strong psychological breakout moves for the index for the next couple of days, 3-4 days, managed to remain to a consolidation, minor dip which came by into the index, but then post that we saw the index moving up higher on the back of that sector rotation move. So this time around, because the move has just recently started for many of these high beta sectors, banking, etc., I would believe that we should have more, room on the upside for the indices.
Okay, more upside for the indices. But Anand, where is it that you're finding some upside? Any stocks or segments in the market that you identify opportunity in at these levels?
Sectors are pretty much, almost all sectors have done very well, right? There's hardly anything which has not done well. To some extent, you could argue that private sector banks have kind of underperformed for some time. That was made up in the recent few days, and that upside continues to be seen. So to some extent, one could argue that there is perhaps still some upside there. But by and large, if the market has to go up, rotation will ensure that almost all boats rise, because finally it's the sea level that is rising, not necessarily any particular theme that is playing out at this stage. From that perspective, it may make sense for longer term investors to just stay invested rather than trying to time it. For traders, of course, the sectors keep changing. I mean, every announcement from the government or from a corporate tends to create some excitement. Therefore, you have to be looking out for corporate action, for government action, like, for example, the announcement of the power spend that the government announced. I mean, it's not as if NTPC or any of these companies have not been doing well, but it provides you one more leg up in the near term from a trading perspective.
Okay, yeah, that's a take coming in on some of this fresh investment coming in as far as the power sector is concerned. But what about autos? And I'm just going back to the point that we're discussing on Hyundai. Do you see it displacing the kind of performance that M&M and Tata Motors have been showing for the last couple of years? Do you expect that dynamic to really shift?
Are you talking about when Hyundai gets listed?
Yes, Anand.
Right. So obviously, there will be a change in the asset allocation. It's a very large player. A very strong competitor in most of the segments where it operates in. You are already having, Kia as along with it. So from that point of view, also the portfolio and the branding, etc. There are several options now that Hyundai has. There is no question that they are probably one of the few players from the international markets. The Americans don't get India at all. The Europeans have tried and failed, and that pretty much leaves you the Japanese and the Koreans. So from that perspective, the Koreans have done a fabulous job of trying to understand how the Indian market and the Indian consumer behaves. There is no question that from a portfolio perspective, you will have to make space for a company like Hyundai when it's listed. That will automatically mean that either there is an overall increase in the asset allocation towards auto, which I doubt at this stage. More likely, you will have some easing off from the existing players and more allocation into a new listed entity.
Right. Okay. Let's just get in some BTST trades as well. Going on that note, stepping into the last lap of trading literally. Kunal, anything on your list?
So PVR Inox is something which is starting to look attractive above the 1700 levels. So would suggest a buy with a target of 1800, stop loss at 1650. And NTPC is something which has given a flag pattern breakout above 425 plus mark. So buy with a target of 455 and stop loss could be kept at 426.
Right. Naresh, what about your BTST ideas?
So first is a buy on Axis Bank, good momentum here, stop loss at 1245, target price of 1290. Second is a buy on Oberoi Realty. The stock is close to breaking out into new all-time highs, good momentum over the last few sessions. Stop loss at 1910, target price of 1980.
A topic coming in as far as some of these BTST calls are concerned, but we have been speaking with market experts to understand how to really position the portfolio at this point of time. In fact, hear out what Chris Wood had to say, because he's been quite positive when it comes to the entire real estate pack. There was that added fillip that Piyush Goyal also talked about. In fact, while we play the bites coming in from Chris Wood, wanted your take as well, Anand, on the real estate pack. There were signs that the stocks are getting a bit fatigued given the kind of run up that they have seen. There was that inventory build up, the murmur of higher discounts coming in just around the corner ahead of festive season. How should one play the real estate pack? Book some profits or stay put?
Well, real estate typically has 5, 6, 7 years of cycle life. So, you had a situation where first commercial real estate did very well, and then, residential real estate has picked up. We are now almost, let's say, 4 or 5 years into, because the trigger started off around COVID, when people started buying larger houses, etc., and it has continued since then. So we are well in the 5th, perhaps the 6th year ongoing of the kind of cycle. So you are near or probably in a very mature phase of the cycle, where from here on, you will find it a little more difficult because the inventories have, because the demand has kind of, to a reasonable extent, been taken care of. And of course, the supply keeps coming in at a higher and higher price. There is no question to my mind that at a lower affordable housing kind of market, there is an infinite market almost in India. But that is a difficult product to make, because affordable housing means very small housing. There's none of the costs associated with affordable, with so-called a cheaper house actually comes down because the house is cheap, except when it is smaller. And that is not the preferred price point for most, preferred, consumption item for most people. So I would argue that, it will take a while for housing demand to kind of catch up with the prices. It's probably run up a little ahead of itself. So a little bit of a pause should be anticipated. How does one play it in the market? I think instead of looking at the realtors themselves, especially the very large ones which have probably run way ahead of the curve, it may make sense to either look for niche segments, which is always a more difficult story to look at, or if you want a broad-based approach, look at housing finance and related companies which are financing the housing rather than actually looking at the real estate directly.
Right, okay, makes sense. In the meantime, here's the soundbite that we were referring to. Some of the biggest voices actually talking about India and their conviction on the Indian markets.
I believe the inventory in the top 7 cities is in a multi-year low. So what should happen is that the property recovery should gradually broaden out. In terms of it's been led by the high end. Basically, the amount of properties being bought in India is still very low, what we've seen in China at the peak. So I think from right now, I think we should hope that the property cycle can run another 4 years. We're just entered in the fourth year of this upturn. The drivers of this current bull market we've been in have been more in the energy, infrastructure, real estate area, and my guess is that these remain the key drivers of the story. 6 months I would be owning gold mining stocks. Gold has gone up a lot, energy is at the bottom end of the range, the profit margins of gold mining companies should increase significantly, and so far gold mining stocks have been underperforming gold bullion. Now, my long-term recommendation to anybody listening would be to sell US Treasury bonds. The banks are overdue some outperformance. The banks have also had a bit of a regulatory headwind because the RBI has been quite preemptive in terms of regulatory initiatives in recent months, which in the short term is negative for the banks, but in the long run it should hopefully be positive because it means that the credit cycle should be maintained for longer without disruption. So I'm maintaining banks in my greed and fear India long-only portfolio.
Chris Wood was talking about gold, so let me get the view of Anand as well as Kunal on this. Kunal, what's the view on gold now? A massive run-up. I think it's run up more than the Nifty this year so far, if I have it right on a YTD basis. 75,000 in the Indian markets after that entire duty cut happened. Where is it headed next, both in terms of the global rates and India, if at all you're tracking?
So global rates, I think India prices, we have to adjust our duty cuts, for gold prices, and I think adjusting to that, we're almost at 80,000 plus in terms of the INR prices. Now, on the gold prices, I think what we are seeing is that 2665, if I'm not wrong, was the high the gold prices had broken yesterday. So that was a very strong breakout level yet again for gold. And I think what we are seeing right now is a consistent pattern of higher highs and higher lows for gold over the last 3-4 months on the dollar denominated prices specifically. So that indicates that what we are looking out for is a fresh base or a support which has come back at 2550, 2575 on dollar prices for gold, and on the upside we could be looking at 2725 to 2750, which means potentially another 2% to 3% rally over the very near term is what we can expect. That would probably trickle to our markets, and in the Indian prices maybe closer to 77,500 odd for the INR prices for gold.
Okay, Anand, and wanted your take in terms of this gold price spiking. What should be the play, if at all, in the Indian stock markets?
Well, I don't know about the Indian stock market alone, but gold definitely today, if you are a central bank, you have very little option than to continue buying gold. The simple thing is after the currency has been kind of weaponized by the US against Russia, for most countries which have any kind of reserve which needs to be diversified across asset classes, most of the currencies, including the US currency, are looking like on a weak footing. The problem is that has to be traded against something. So the only something that you have actually is either Bitcoin or gold. Given that central banks are a lot more conservative, I think you are looking at gold continuing to have very strong buying support from global central banks. Now that doesn't mean it'll go up in a one-way street, but I don't see any reason for it to not continue to accelerate from here. The best way to play it would be, as Mr. Chris Wood said, the gold miners. Most of the gold mining companies are actually pricing gold at maybe a third of what the actual price is. So, a good portfolio of gold miners would do well. There are internationally listed ETFs which one could look at. Even something like a GDX will probably give you the kind of at least trailing upside with some protection if the market on gold itself were to weaken a bit.
Okay, that's that on, how is it that you can cash in on this bullion run that we are seeing. By the way, the Nifty as well has picked up steam. We're well above the 26K mark. Yes, it's a fresh high, but large caps like NTPC almost closing in on a 2% gain, over a 2% gain coming in for Axis. The Bajaj Financial Twins looking strong. Tata Steel 1% higher. There's, of course, Dr. Reddy's as well, which has seen a huge spike. In fact, if we can just bring up the intraday graph of that one. M&M, iShares, all picking up steam right now as we speak. Of course, a large part of the market is languishing too. Tata Motors, Titan, SBI, Infosys, they are not participating in today's move. They're still languishing, as is the case with the TechM or an LTIM as well. And many of these broader market stocks as well, while they are propelling forward, like a Taracom, Godrej Properties, even in Apollo Tyres or an Alchem. There are the ones like an LIC Housing, IEX, Dabur, they're also languishing, and you're in fact seeing cuts of almost about 4% pretty much across the board. But more on the markets, I'm going to hand it over to Ashesha for exactly that.
Well, absolutely. What a solid recovery we have seen in the last hour of trade, last half an hour of trade. Nifty inching above that 26,000 odd mark. At 26.15 is where Nifty 50 currently is at. Nifty Bank also saw that outperformance come in. Remember, we've seen that outperformance over the last few days. Today also Nifty Bank ending above that 54,000 odd mark. We had Power Grid, one of the top gainers on the index today, on the back of several news pieces and on the back of a brokerage report as well, up nearly 4%. Axis Bank and NTPC were also some of the other gainers on the index. On the losing side though, we had LTI, Mindtree, Tech Mahindra and Tata Consumer, the top three losers on the index today. Let's talk about IT index in particular. That was the biggest sectoral loser today. Nifty IT ending the day with a cut of nearly half to 1% cut. LTI Mindtree down nearly 4%. We had Tech Mahindra and Emphasis ending the day down nearly 2.5 to 4%. Apart from that, PSU Banking Index, second day in a row we saw losses come in on this index. We had Punjab National Bank, Indian Overseas Bank and Bank of Maharashtra, some of the top losers on this. SBI also ending the day with a cut of nearly half to 1%. Realty stocks, meanwhile, were on the gaining side today. Mahindra Life up nearly 5% in trade today. We had Godrej Properties and Overall Realty, both the stocks ending the day with gains of nearly 4 to 5%. Metals, remember, they were the shining stars of yesterday's trading session, continued their upturn. We had APL Apollo, which was up. Vedanta and Nalco were some of the other gainers in trade today. Nalco, in fact, has gained nearly 10% in the last two trading sessions. Some of the other newsmakers in trade today, let's talk about IEX, the big newsmaker for the last two trading sessions, ending the day with a cut of nearly 4.5%. We in fact had a couple of brokerage notes on this. Bernstein continues to maintain its underperformed stance with a target price of 130. They believe nearly 30% of companies' volumes will be impacted on account of the recent development that has taken place. The stock is down 4.5%. Power Grid and NTPC, we did talk about those stocks on the back of some brokerage reports. NTPC up 1.5%. Power Grid, Goldman Sachs report where they maintained buy with a target price of 370. This stock was also up nearly 3%. Piramal Pharma, some ambitious plans that came in from the management that they are targeting to double their revenue and triple their profits by 2030. We also spoke to the management. This stock up nearly 4.5 to 5%. Delta Corp on the back of their demerger news, where the company will be demerging their realty and hospitality business. This stock was also up 2.5%. But yes, a solid recovery in the last half hour of trade, closing well above that 26,000 mark. But you don't go anywhere. Stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.